Safari Industries offers a rare blend of growth and quality that is hard to ignore in the current milieu. Let us do a three-point analysis to understand the key fine print of the earnings and also the outlook on the company. 1. Q3 result highlights. While the overall sluggish consumer sentiment has impacted consumer discretionary companies, and Safari Industries is no exception, it has fared relatively better and has so far succeeded in also keeping its head above the waters. Now, it was also a good quarter for good execution. While the top-line growth has slowed down from over 30% witnessed in the first half, the gross margins have improved further. Now, product mix, decline in raw material prices, along with some concessions from the Chinese vendors, has had a positive impact on the gross margins. Now, finally, the company also managed to take operating leverage to its advantage and also reported a sequential improvement in margins at a profit before tax and profit after tax level. The company tries to maintain margins either through the price hikes or better negotiation with suppliers without impacting the volumes. 2. What's the outlook going forward then? Well, Safari is the third largest player in the organized luggage market and has close to 17% of market share. Now, growth in the top line in H1 in excess of 30% was remarkable. This reiterates our thesis that there is a meaningful shift from the unorganized to organized players post-GST. Now, despite this competitive environment, the company has strengthened its position in the travel lifestyle marketplace and is confident to grow faster than the market growth as well. Now, the secret sauce behind its success is the well-diversified multi-brand, multi-channel and multi-category businesses. The Genius and Genie brands that cater to the teenagers and young adult segment has grown well in both the backpacks category and the newly introduced fashion bags category as well. Now, the long-term macro drivers are in place despite the temporary slowdown. The continued shift of consumer preference from unbranded to branded products, accelerated growth in air travel, wedding season-based purchasing, shortening of replacement cycle and the overall GDP growth are the structural drivers for the luggage industry. 3. What should investors do now? Well, prolonged macro slowdown severely impacting the consumption, a rise in raw material prices and depreciation of the Indian rupee that makes raw materials prices costlier, supply disruption from China due to coronavirus and higher taxes on imports are some of the investment risks worth bearing in mind. Now, Safari trades at the 31.6 times FY21E earnings expectations and also has in the past couple of months run up quite a lot. However, given the strong industry dynamics and Safari's vantage positioning, the coming weak phase could be an opportunity to accumulate the stock for the long term.